Welcome to FOMO Consulting for your daily AMC stock analysis video on Sunday, May 16th. Ladies and gentlemen, let's go over this week's battle plan, and this may very well be the week if all things come together. And as always, the apes are winning, the diamond hands are winning, and most importantly, the retail investor is winning. We will have a price prediction at the end of the video, so stay tuned. And if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel and I would appreciate your support. Let's get into the video. So from the bottom of my heart, thank you. We crossed 1,000 subscribers, but keeping in mind, this is a family. We are the FOMO family. One of our community members, one of my earliest supporters and subscribers, Robert, he is going through some tough times with family, has a very ill family member. So shoot a comment to Robert below and just tell him that we're all thinking about him and he is in our thoughts and prayers. So let's start with a quote. I spent half my money on gambling, alcohol, and wild women. The other half I wasted. By W.C. Fields. I would hope everyone's investment plan does not include that, but to each his own, right? So let's brief review of last Friday. AMC clearly showed tons of strength under heavy short selling pressure. We closed at $10.98, up 21 cents, 1.64%. No doubt it sets us up beautifully going into this week to hold that near $13 level. There was a battle for options expiring Friday, as always. To close near $13 showed extraordinary strength in this stock from where we've been. Bigger picture, hourly chart clearly on an uptrend. The yellow arrow certainly shows where we've needed to cool off, kind of come back to earth, back towards the trend. No worries whatsoever, but it is worth noting this week we do need to show additional uptrend and show continued strength. So this is the weekly candles, rare look. Most people don't show this, but you can see we are still clearly on an uptrend. The indicator, simple moving average, is now heading back in bullish direction. We did need to somewhat correct and get back towards that illustrated red trend line. We are now bouncing and heading back again in a bullish direction. MACD is certainly looking very bullish as shown below. So let's look at the daily, kind of a close-up. Clearly red indicator or illustration trend line shows we are still heading upwards as we need to be. Closer look, you can see the simple moving average very much moving in a bullish direction. We just completed a shallow MACD crossover to the bullish direction, very positive. RSI, very bullish, albeit we need to make sure we don't get in overbought territory. A good, healthy level is very, very good. So quick reminder, the 43 million share at the market equity offering is now gone, done, and AMC will be better for it. Obviously, there was some dilution in the market, but we are past that now and clearly on a bullish uptrend. As evidenced by that, B. Riley raised their price target from 13 to 16, one of the earlier bullish analysts. Certainly this is very positive news for us as Wall Street analysts are now getting on board with the upward trend of AMC. So let's look at the earnings difference. So Cinemark just posted their earnings last week, and I meant to do this last week, apologies. The earnings per share Cinemark came out with was a loss of $1.75 EPS. That was a miss of 14% versus consensus estimates. You can clearly see below AMC missed by 11%, but is in a much healthier position than Cinemark from an EPS perspective. Additionally, AMC posted a loss of $3.15 at the end of Q4. We have improved nearly $2 per share. That is absolutely huge, as well as Cinemark certainly improving. The overall theater business trend is improving, but certainly AMC is outperforming, far more cash. They're doing the right things to improve their business. So overall, I don't think it's an understatement to say that this is not a dead industry. This is not an obsolete industry. People love the movies. So trend data around analyst ratings. Clearly, if you look to the left, that is the May data. There is no sell ratings from analysts, at least the good ones, except for Mr. Greenfield. As you can see, back in February, we were in a similar position as we began our run up. Obviously, April and March, we fought tons of FUD, a lot of negative hit pieces, a lot of poor analyst ratings for a lot of different reasons, but we are clearly in the uptrend. So, article came out Friday night, very, very bullish. The anticipation from a very technical Wall Street analyst perspective is they anticipate a $14.64 buy-in target. You can pause this and read the screenshot, but it is certainly a very bullish case for AMC going forward. So you got to start your trading day right, and tomorrow morning, I'm sure everybody's dreading going to work on a Monday morning. You're waiting for the rocket to launch. You're desperately wanting life-changing money, life-changing events. So put on the country western artist from the 70s, Johnny Paycheck, and who wouldn't like hanging around a guy named Johnny Paycheck, right? Take this job and shove it. Crank it up before the market open, and let's get the money-making music and good vibes going. So I showed this yesterday. We'll briefly go back through and we'll dive a little deeper. What is the Williams Alligator Indicator? Legendary trader Bill Williams, an early pioneer of market psychology, developed the trend following Alligator Indicator, which follows the premise that financial markets and individual securities trend just 15 to 30% of the time while grinding sideways, ranges the other 70 to 85% of the time. Williams believed that individuals and institutions tend to collect most of their profits during strongly trending periods. So before we get into the charts, quick explanation. The jaw, which is the bottom typically, the blue trend line, starts with the 13 smooth moving average. The teeth are the red line, 8-day smooth moving average. Lips are the green line, 5-day smooth moving average. You will see how this looks on the chart shortly. So the indicator applies convergence, divergence relationships to build trading signals, with the jaw making the slowest turns, because again, it's the slow, longer term trend line, and the lips making the fastest turns, which is the green trend line. The lips crossing down through the other line signals a short sale opportunity, while crossing upwards signals a buying opportunity. Williams refers to the downward cross as the alligator sleeping, and the upward cross as the alligator awakening. So let's feed the alligator. The alligator sleeps for some time before a new awakening signal goes off and uptrend commences with another quote-unquote eating with an open mouth phase, end quote. So let's look at in January, late January, obviously a downward trend, sleeping alligator. No one wants to mess with a sleeping alligator. Started the upward trend towards the squeeze. Gator woke up, started opening his mouth to eat, obviously shorted back down. He closed his mouth, took a brief nap, as we all do after a big meal, and he began to eat yet again in late February, early March to a more bullish direction. So here's a bigger picture. So again, the baby squeeze, mouth wide open. He closed it, took a little nap. We all do after a big meal, right? Opened his mouth again, late February, early March, ate for quite some time. We ran up to $15.54. He began closing his mouth as we were shorted down to the $9 range, right? We hung in that channel for about 3. So let's look at Bitcoin here. So early on, obviously you get a divergence. He opened his mouth, started eating on a run up, took a quick nap, started eating again, quick nap. And he's doing it again, and as you can see by the yellow arrow, it is in somewhat of a downward direction. He is more of a selling indicator at this point, but overall, as you can see by Bitcoin and the massive run up it's had over the last year or so, this indicator seems to work very well. So let's look at Dogecoin. You can see, obviously, when it was trading around that 5-cent level or whatever, all of a sudden, Mr. Alligator opened his mouth, right? Started chomping his way, and he's had his big mouth open the whole way, all the way up. We are starting to see a bit of a trend of closing, but I believe as long as his mouth remains open, it will continue a bullish run. So let's look at XLM Stellar, one of my more favorites. Recently started trading on Webull. You can see where mouth wide open, closed it, had the run down, and has now reopened his mouth again. As a matter of fact, Stellar XLM just hit 80 cents this morning. That's a good sign. So let's come back to GameStop. So broader view, big squeeze, opened his big mouth, started eating, closed it, more of a short sale signal heading down. Early March or late February started running back up again for the secondary squeeze, big mouth wide open, and ever since then he has pretty much been sleeping until more recently, as evidence on the left. Those trend lines are starting to ever so slightly open back up and head towards a bullish direction. We'll keep our eye on it. Coming back to AMC, so this is the hourly chart over the last week and a half, 10 trading days or so. You can clearly see we were down around that $9 channel, and he opened his big mouth as we started heading upwards. Again, a simple moving average and the 3 alligator trend lines clearly show an open mouth until late this week, Friday. There was a lot of the selling pressure, as we know, which helped him at least put his lip closer to his teeth, but the jawline is still open. So let's take a different look here. So this is the daily. So using the same trend lines, this goes back to the late February, early March perspective. As you can see, when we started that run up, he opened his big mouth, right? Got the alligator eaten, woke him up. Then we tightened up a little bit with the short attack, and then we continued our run up. If you look now, when we got to, on the far right, when we got to that $12 or so price point before earnings, we took the 7, 8, 9 days in a row of red candle days, shorted us back down. He closed his mouth, went through a brief sleeping period, potentially a short selling opportunity. It is now distinctly and very distinguishable bull pattern at this point. So let's look at the bigger picture. So you've got baby squeeze. Gator woke up from a sleep, started eating. He was hungry. Come into late February, early March. Gator went to sleep briefly, started eating. He went back to sleep through basically all of April, and now he is awoken again with his mouth wide open. As you can see on the left, we have a very wide open pattern. We have divergence. We have a hungry gator, and my anticipation is this will continue, but we have to keep the volume high. We have to keep the interest. We have to keep people engaged, and the buying pressure must remain. We have to feed the gator. and he certainly likes shorts and hedges. So quick check of the Ortex trend data. Everything is in perfect alignment with what we need. Utilization still at 100%. Some of the indicators went down, and that's actually a good thing. That would indicate they are somewhat covering or preparing to cover and trying to get out of the way. 206 million was total volume, substantial increase Thursday and Friday from where we've been in the actually around 20 to 30, 40 range over really the last 2 or 3 weeks. So that was a very welcome change, and you can certainly see what happens with price action. Institutional owners are piling in, increasing their positions, and we've had an additional 7 buy-in over the last few days. So what's important about this chart is the red line. The red line is the launch pad. It is the line of demarcation. It is the point of no return for the hedgies, and they clearly have fought us off now 3 or 4 times. They know it, and we know it now. I've said it for weeks. The yellow line is the borrowed share volume. You can see even on a 20% day, they do not have the shares to borrow. The volume is far lower. They are out of ammunition versus even going back to mid-March. You can see how much more they could borrow, as evidenced by the gray bars. The short interest trend lines are tailing off just a little bit. That would indicate they are trying desperately to exit their positions, which is why the Ortex data has gone down a bit. Again, what's important about this is the big red wall. We cannot jump it. We have to break it. We have to stand on the rubble of it and claim victory. There is no other way around it. We have to smash it and hold it and claim it as ours. As you can see, back in mid-March, we ran up, we touched it, they shorted it right back down. They had far more firepower. We've trended sideways for the better part of 2 months. We are now approaching and making our next attack. I believe we are much higher on the level. We are starting in the $11, $12, $13 range to start our attack. If you recall, looking on the left, we started at a far lower point to run up for our first attack. We came out of the 6s and 7s. We are starting at a much higher price point to start our next attack, and I do believe we will smash the wall. So another quick reminder, all of the baby squeeze that happened in early or late January was pre-market. There was a lot of action post-market. Do not sleep on this stock. Do not ignore it. It will run up, and it has a history of most of its heavy price action being in the pre and post market. So let's build a price prediction together. So here's the options chain. Basically, I use it as sentiment. We are at a 3-to-1 essentially call to put ratio. This was as of Friday. So we are exceptionally bullish from a 3-to-1 perspective. So let's look at the option chains together and figure out where the battlefield is this week, ladies and gentlemen. So first, let's look at the extremes, the extreme low and the hopeful high, as indicated by the red trend lines. I do not believe we'll even get close to the $9 level, but again, I like to put it there because you can clearly see there's a lot of hedging, a lot of open interest on the put side, on the right side. Let's look at the more cautionary area between 10 and 1050 and 14 and 1450. There is a ton of open interest between the around that $12, $13, $14 range, obviously, as you can see on the call side. So, but let's look at what I believe is the true battlefield this week. It's between $12 and $13. That is a lot of open interest on the call side, and it can change by the minute and by the day, but let's look a little closer. So if we close above 1150, you'll have 51,000 contracts expire in the money. If we close above 13, you'll have 98,000 contracts expire in the money. Close above $14, which would be phenomenal. 126,000 contracts expire in the money. And if we closed above 15, 143,000 contracts would expire in the money. And that would be game over. And we would go to the moon. I have no doubt. So last chart here real fast. So on the left, you see the run up in mid-late March, where we crossed $14.54. That was absolutely key. That was our first attack. I've just drawn, for illustration purposes, kind of a general trend line as evidence on the blue. That's basically the simple moving average. You can see the steepness and the trajectory. But if you look at the MACD, it is far shallower using the overall trend of the MACD of that time, as well as the RSI. Far flatter. The three were not aligned in their trajectory. Moving over to the right, you can see where I've taken the current trend, and we are in a more aligned, steeper trajectory. Again, it may change day by day, right? But this is what I'm seeing now. If you look in the box right in the middle of the screen, that is leading up to earnings. So as you can see, we obviously took those 7-8 red days, they shorted it down. Obviously we had the dilution that we weren't aware of, but we are in a far better place. We've obviously hit that low point, and we have basically been on an upward trend ever since. So on the top right, you will see kind of my general overall thoughts. So the red line is at 1450 level. We have to break the red wall. And I believe because we had such a beautiful green day on Thursday of around 24%. Friday, we had another green day, which was fantastic. That is about a 25% increase in 2 days. We need to just kind of trend, nothing crazy, stay on the uptrend, but a little shallower, and come back closer to that blue moving average. We don't want to overshoot it too awful far, because eventually it will correct regardless. But I do believe a kind of a general idea in that black box on the top right of your screen would be my prediction or my thoughts around this week, kind of an upward flattish consolidation week. Keeping in mind that there's a lot of options expiring, indexes, mutual funds, things of that nature, equity, excuse me, a lot of them expiring Friday. We could have a lot of midweek volatility. I believe people will be getting out of the way earlier in the week to either exercise those options or whatever. So we do have a lot of options volatility coming in this week. So again, that would lead to some uncertainty, and who knows what's going to happen with that. So as always, I have skin in the game. We win together, we lose together. So this is my bold price prediction for the end of the week based on the options information, based on the current trend, based on where it looks like we're heading. I hope the $14 level is certainly lower than reality. I would love nothing more than to get above 1450 and stay there. That would be a breaking point, I believe, for our opponent. But this is what I'm seeing in my personal prediction right now. So let's end with a quote. Someday I want to be rich. Some people get so rich they lose all respect for humanity. That's how rich I want to be. By late great comedian Rita Rudner. Even if we go to the moon, let's all remember why we're in this, and let's stay grounded. So as always, I hope you found this video informative and entertaining. If you did, please like, share, comment, and certainly subscribe. It's a newer channel, and I would appreciate all the support. But most importantly, I hope your life is full of green candles. Take care. I'll talk to you soon.